Correct. Right. Yep. And that's how I counsel a lot of veterans to do wealth building, is that you can buy a home, you can buy up to a fourplex on a VA loan. So whether you buy a single family or a multi-unit and you live in one unit for, hopefully a year, then you go buy a new primary at zero down or with a small down payment, again, using your VA loan. And then you rent out that first home, which is, probably cash flowing by that point as well. Even if you did that with a couple duplexes or triplexes, like what a great way for our veterans to get into some really like good generational wealth, cash flowing.
That's what I keep telling everyone.
It's pretty cool.
Welcome to another episode of Get Real Estate with Liz. And today I have a special guest, your real estate girl, Lauryn. And Lauryn, can you please tell us, who you are, what you do, and where you come from?
Yeah, absolutely. So I'm Lender Girl Lauryn. I've been a loan officer since 2012. So I've seen some stuff. I specialize in helping veterans. I can help anyone, but I have a lot of veterans in my family, and my husband's a veteran. So it's kind of near and dear to my heart. I've also seen what can happen in the real estate and lending industry with a lot of the miseducation on VA loans. And so I've noticed a lot of veterans are very underserved, or the information's not correct. They get a lot of bad information, misinformation from other lenders, other realtors. So I really am passionate about being out there and educating the whole industry on kind of how to serve veterans better. And Elizabeth is always a great advocate of that as well.
Yeah, no, it's actually really good because, a lot of the times people say, oh, I thought that you had to put money down, or, oh, I thought that, unless I have excellent credit. And it is important to reach out to your lender and find out exactly where you stand, because there is a misconception on these VA loans.
Yeah,
Can you elaborate a little bit more on that, on what are some of the requirements, or what, specialties are, or your niche or whatever?
For sure. Yeah. So the VA loans are actually the easiest loan out there once you kind of know what you're doing. And so we'll go over some of the misconceptions and myths. Some of the big ones are that you can only have one VA loan at a time, or one VA loan ever. And that's not the case. So you can use your VA loan. Think of your VA entitlement as like a credit card. Okay. So kind of rinse and repeat, right? You can buy a house on your VA loan. You can reuse it. You pay the house off. You can reuse it, buy another house on your VA loan. You can do that as many times as you want. And you can have more than one VA loan at a time. So a lot of times you can always get the first house zero down. A lot of times you can get the second house zero down, or with a very small down payment. And so those are calculations that we as the lenders run to see what the best fit in the situation is for you if you're going to be purchasing a second home on the VA. So lots of really, really cool ways to do that.
I have a question on that one. So I was aware that you could get a VA loan and then refinance and then get another one. So you're telling me that we could get two at the same time?
Correct. You don't have to refinance. So, and I've heard other lenders say that too. Oh, you have to refinance to a conventional loan in order to use your VA again. And that's not the case. It's not a requirement.
So that's good to know.
Yeah. So we can always look at it. So when a veteran has full entitlement, meaning they don't have any current homes owned under a VA loan, and they don't have any old foreclosures or short sales or anything like that, completely clear entitlement, there's no loan limit. So a veteran can buy a $5 million house with zero down, assuming that they qualify with their income and assets and credit, right? And that they want a payment that's that high.
Yeah, that's important.
But it's a great, there's no loan limit. And that changed several years ago. So that's another common misconception. And then, yes, if you're going to be purchasing your second home, it's still a primary. So you're moving again. It's not a second home residence, but your second use of your VA loan at the same time, then that's when a small down payment may apply or it may not apply. And those numbers change a little bit every year, which is why it's always important to stay in touch with your real estate and lending team to get the most accurate information.
That's correct. I have another question since you brought it up. So if they're buying another house as their primary, that's where you're saying that it can fluctuate, right? But
Correct.
If they buy a second home or an investment property, then it totally changes everything, right?
Well, so you actually cannot use your VA loan for a second home or an investment. It has to be a primary residence. You have to have the intent to occupy it as your primary at closing. And some lenders in the VA guidelines, they say we would like to see you live there for a year. However, if it's a documentable reason why you can't, then that's totally fine. So maybe you need a different school district. You have a baby, you get a divorce, your parents move in with you, et cetera, et cetera.
Bigger house.
Those are all reasons, like legitimate documentable reasons of why, like, hey, if you need to move, in a short period of time after you purchase that home, then it's okay to rent it out and buy another one. Okay. So, yeah. And you had mentioned credit scores earlier as well. So the VA, this is another very common misconception. The VA does not have a credit score requirement. So the VA does not publish now, but lenders do. Those are called overlays. So veterans, if you call 3 different lenders and say, what's the minimum credit score I need to use my VA loan? You can get 3 different answers because lenders have their own requirements on what your credit score needs to be. Now, at my company, we don't have a requirement. We don't have that overlay. We just follow the VA guides. So, but it still has to make sense.
Yeah.
Most people, technically
Common sense, basically.
we could get you a loan at a 500 credit score, but we have to look at why you have the 500 credit score, what caused it. And then most of the time, we do need to do some credit repair to get you approved. But don't just talk to one lender. I mean, if it's just me, you can just talk to me. But if you're calling around or, don't just talk to one person because you may get different information from different lenders.
Source right away.
Yeah.
No, but so the credit score, that's a big factor because a lot of the times people think like, oh my gosh, I'm not going to be able to qualify because I have a 520 or a 560. Right. But, getting to the bottom of it, like what you were saying, it could be something so simple as just paying down a credit card because you might be maxed out, or it can be something more, more in detail, like collections or, stuff like that.
Yeah, and
payments.
we do some counseling on that. And if it's major or advanced, we have some referrals we'll send out to a credit counseling agency. But we do most of that in-house. But VA's more concerned with your credit history, especially over the last 12 months, than they are with the credit score. And it's just a really good thing for people to know.
That's actually really good. Yeah. Another thing, you were mentioning no money down, which is great. There's a lot of programs out there that have no money down, but what's the difference between the VA loan and, if you're a veteran compared to other programs like USDA or CalHFA? Yeah,
that's a great question. So as a veteran, your VA loan is always zero down, especially if you have that full entitlement. It's your first purchase. Then you can, as a veteran, you can layer your VA loan with the closing cost assistance program, which like CalHFA, GSFA, Golden State Financial Authority, they have those programs. So in California and other states have other versions. There are ways for veterans to get their closing costs covered if you don't have that money out of pocket, or if we can't get the seller to pay for it, things like that. But the VA loan is always truly zero down. Now, if you're not a veteran, you can mimic that, but it's going to be through a down payment assistance program like CalHFA or Golden State. Now, so again, as a non-veteran, you have the option of getting your down payment covered, and you have the option of adding closing cost coverage on top of that. So there's a couple different layers and a couple different ways to structure that assistance depending on your needs of how much you need and in which capacity. So the more assistance that you get, the higher your interest rate is, right? Because nothing's free. Yeah. There's no free money out there. You pay for it one way or the other. But it can,
if there is, let me know.
Yeah, let us know. But it can be a really great way of getting you into a home with zero or very little money down, whether you're a veteran or not. So there's a lot of great programs for that.
You were talking about the closing costs, because that's another expense that people sometimes don't think about. They think, oh, it's no money down. Wait, why do I have to come up with $10,000 or $12,000 depending on the sales price? And you were mentioning about, having that assistance. How important is that, for some people, or, versus, trying to save that money or getting that assistance, basically.
Sure. Well, and one size doesn't fit all. And that's why we have so many different options and so many ways of structuring loans and assistance differently. So it's going to come down to your individual situation. As a general rule of thumb, it's always better to come in with your own money if you have it, or to get a gift from family or close friends, because you'll pay a higher interest rate for the assistance. And in some cases, depending on your income levels and some of the guidelines on those programs, in some cases you kind of get locked into those loans. They make it a little harder to refinance out of the assistance loans, if that makes sense. And we can always talk about that more on an individual basis. But then there's the buyer who's like, well, I can save up my closing costs, but it's going to take me 2 years. versus using a closing cost assistance program. And then we go, okay, well, how much more is the house going to cost you in 2 years? How much higher are your property taxes going to be? And in that case, it's probably better to use the assistance program and buy a little bit sooner to lock in a lower price on the home, a lower price cost basis on your property taxes.
And everything changes. You know, we don't know what the rates are going to be in a couple of years. We don't know, you know, a lot of things that, I mean, if we had a magic ball, we'd be in
Vegas. We wouldn't be here.
But it is important. And sometimes people get discouraged too.
Yeah.
So when they say, oh, I have to save money, and they really don't, and then they get discouraged.
Yeah, there's a lot of options. And there's some extra perks for first responders and for county and city and state employees on some of those programs. But they're really work great for everybody. And fun fact, you don't have to be a first-time home buyer to take advantage of those programs. You can be a move-up buyer where you're moving to a slightly bigger house.
I keep telling everybody that because everybody thinks like, oh no, I won the first time buyer program, and I'm like, there's no such thing.
There's no such thing technically anymore. Yeah.
It's a misconception.
It's a misconception. But yeah, anybody, even if you already own a home or you have owned a home in the last 3 years, you can still take advantage of those down payment assistance programs. Now, the rates are slightly higher if you already own a home versus if you haven't owned a home in the last 3 years. And that's the technical definition of a first-time home buyer, is you haven't owned a home in the last 3 years. So, but we work through that with you guys and make sure that you know your options and your situations and have some different numbers to play with. Make sure your payment's affordable and all that. So
make sure it fits in your budget.
Yeah.
Another misconception, or I should say a truth, is what about the VA and the mortgage insurance? Because that's a huge one. You know, that's a big chunk of money that people are paying out of pocket on these other programs versus the VA loan.
Right. So VA never has mortgage insurance, and mortgage insurance.
Wait, did you just say never?
Never, ever, ever has mortgage insurance. It's one.
I already knew that, but I just wanted you guys to
to hear it.
Say
it louder for the people in the back. Right.
Yeah, that's right. So never.
Now with conventional loans, anytime you put less than 20% down, you'll have mortgage insurance. On an FHA loan, you will always have mortgage insurance. Don't FHA my VA. They're different.
Yeah.
So VA never has it.
Until
FHA
you
always
refinance out of the FHA, right?
Yes. So for an FHA, unless you do put a much larger percentage down, it will fall off at some point, I think after like 11 years. But for all intents and purposes, you do have to refinance out of FHA in order to get rid of the mortgage insurance, even when you have enough equity in your home. On a conventional loan, it will automatically fall off at some point. But yeah, VA is the only product out there that never has mortgage insurance. So.
And that's to me, that's huge.
Yeah.
You know, so I tell all the veterans out there, take advantage of this opportunity because it doesn't get any better than that. Like no mortgage insurance, it can be anywhere from like $100 to like.
I've seen it be $300-$500 a month. I mean, it's usually based on a percentage of your loan amount. So the more expensive the home, the more expensive the mortgage insurance. But I've seen it make a substantial difference in payment.
Yeah. I've seen like around $300, $350 around there. So if you can save that every month, that's huge.
It's huge.
You know?
Yeah.
And then on top of it, you know, the 100% financing.
Right. And also the rates, interest rates on government loans. So VA, FHA, USDA are always lower than on conventional. There's a little bit of that government, you know, kind of backing. So they're able to do that. And I would say most cases, it's about 0.5% lower. Now, of course, it depends. It fluctuates depending on what the market's doing. But yeah, to save 0.5% in rate and no mortgage insurance, it's the best loan out there.
Yeah. So if you're out there, take advantage of it.
Yeah, for sure. For sure.
So Lauryn, what made you, get into lending? You know, I know you were mentioning about your family being in VA and you're very passionate about that, but what actually made you start getting into it?
Yeah, that's a great question. So been licensed since 2012. I actually used to work for State Farm back when State Farm had a bank. And there was kind of a mini refinance boom in like 2014. And so I got really involved in helping my insurance customers take a look at their loan. And we did a bunch of refinances. And I brought our office to, I think, like the third in the whole Western region for banking products that year at State Farm, at an insurance office, So then I got recruited out of that to mortgages. But I was actually on the verge of opening my own State Farm office. I had been approved to open a location. But it was down in Orcutt and I'm North County. So it was kind of like, do I want to move? And so at that point, I pivoted into doing mortgages full time, which is great. I have more flexibility with my schedule, and it really helps me put I'm left-handed, but I can't draw. Like left-handed people are supposed to be like artistic, right?
Yeah, that's what they say.
Right. Well, I'm not artistic, but my creativity comes out through problem solving, and that's one of the reasons I love this career so much.
Everybody has a gift.
Yeah. It's like I'm able to help with like that creative structuring of the loan. Like we find a way to get it closed, we find a way to make it work. So that's been really neat, and it's been my full-time career.
So that's what made you jump into lending.
Yeah. And I've kind of gotten my toes wet at State Farm because it was very like tip of the iceberg. We'd take the application, kind of do the very initial quote, and then we handed it off to the bank, and I was not involved at all. So then I went from that to being, start to finish full time.
State Farm was more corporate, basically.
Yeah.
And then now you became more hands-on.
All hands-on all the way through. So.
And just FYI, so there's a lot of lenders out there, right? And everybody has a lot of the same programs, but there's always the lender that has like a niche or something that they specialize in. And, Lauryn here, I know that she's very passionate about the VA loans. That's why I was like, you got to come over here and say that. So I know that you mentioned, the State Farm and all that stuff, but what actually made you more passionate? I know you mentioned a little bit about your family. Can you elaborate a little bit more on that?
So I got into heavy VA specialty about 4 years ago, I would say. And kind of a twofold. One is just for my family that I have kind of that personal affinity for veterans. But the other part's the industry. So there's so much misinformation and miseducation in the real estate and lending communities surrounding VA loans. And so I've gotten plenty of phone calls to what I call rescue loans, where they're veterans with another lender and the lender messed up, whether it's because they didn't pull the certificate of eligibility when they were supposed to, didn't pre-approve them correctly, aren't trained well enough, whatever the case is. I get a call and they say, I'm supposed to close in a week and my lender just denied me. Can you help? Wow. I mean, I get those, and people in my sphere get those like weekly. Yeah. And a lot of times they're from the online lenders. Veterans United has a really bad reputation for that. They're not the VA, they're just a lender.
They have different reps, and they're not really like actual lenders. They're just, people. They don't even tell them the payment. Yeah. I've had a client like that too, where they got payment shocked because they were like, oh yeah, you qualify for $700,000. So we're looking at properties, and I'm like, wait, do you know what your payment is? Because I'm the realtor and I used to be a lender, so I know. I want to make sure everybody's on the same page. And then they're like, wait, what? Yeah. Oh no. So now we have to backpedal.
Right. And I'm sure not everybody there is a bad loan officer, but we have a saying, friends don't let friends use Veterans United. They're not the VA, they're just a regular lender. And every time I've gone up against their loan estimates as a competitor, I've beaten them on rate and I've beaten them on closing costs. So could we say they're out there spending all their money on marketing and not training and overcharging veterans? Perhaps that argument could be made. So it hurts a lot to see those marketing dollars spent nationwide and get such a captive veteran audience just to have them help with that bad perception that the VA loans have in the real estate and lending markets because of those blown up escrows, blown up transactions, right? So that's part of what I do. I mean, obviously I'm a loan officer. I love helping veterans. It's my career. It's my bread and butter. And I'm really involved in the education. So I teach other loan officers who are my competition, and I teach realtors how to do VA transactions, how to understand them, and how to do them better. Because I've seen the pain that those untrained lenders can cause to our veterans and in the market. And I tell my competitors this all the time, like, I'll help you close a VA loan, even if it's not my loan. I'm not getting paid on it because I want to see our veterans in houses. So I'm part of the
veterans.
Yeah. And I'm on the Veteran Lending Council, and we have a training program for realtors and a separate one for lenders where we do teach and train that. And we it's kind of like force multipliers. We teach and train our people to go out and teach and train other people. So hopefully we can get rid of some of these stigmas in the market.
Yeah, and I was actually going to say that because lack of knowledge and assumption are basically the killer of everything, you know? And when you don't know the unknown, it's like, okay, I'm afraid to do that. So I see that you are doing classes or like doing Zoom during COVID. You were doing like Zoom training and stuff like that, or at the MLS meetings. Right. And so I appreciate you doing that. For sure.
Yeah. Well, you don't know what you don't know. Yeah. Right. And as realtors and as lenders, like you don't necessarily get, as a lender, you don't get training on VA loans unless you go out there and do it, or if your company has to offer some and you watch the screen.
And not only that, but everything's constantly changing. Yes. So you have to be top of mind.
Right.
You know, because maybe there was a loan officer from 10 years ago that did a VA loan 10 years ago, and they haven't done one since. So then
different.
Everything's completely different.
Yeah.
So it's important to stay top of mind.
It is. And there's, you know, I battle the stigma against VA loans with a lot of realtors who are on the listing side as well. You know, we have a buyer and we make a VA offer and the listing agent says, oh, it's VA, or this won't go VA.
That's what I was going to tell you.
All sorts of stuff.
That.
Yeah. And it's not necessarily the case. So I spend a lot of time when we make an offer. I'm very proactive at working with the listing agent, addressing any concerns they have on the VA loan. And I use that as a way to educate them on the VA loan as well. And that does help get offers accepted. Mm-hmm. I've had agents tell me that's why they accepted our offer before. So I think it's just a matter of, you know, the more people you can get in front of, just to spread the correct and the right information, and ultimately helps our veterans get in houses. So.
Yeah, building that relationship and sharing that knowledge, because you know, like we were mentioning, the lack of knowledge. Some of the agents, you know, they say, oh yeah, it's a VA or an FHA, like you were saying, because they had a misconception from back in the day, you know, where the termite and all this stuff, because that's another topic, right? Yeah. So a lot of the times the VA and the FHA were asking for Section 1 or Section 2 to be clear. Now, is that something that is still the same, or has it changed, or who can pay? Yeah. Now the buyer and the seller can either pay for it, right?
Yeah, so we do need termite clearance or pest clearance. Any states that are below the frost line, but anyone can pay for the termite inspection, and anyone can pay for those repairs. So it's all negotiable, right? Which is what we want. We don't want someone to be. We don't want the veteran to be forced to pay for it. We don't want the seller to be forced to pay for it. You guys just need to work it out, and it's a lot more flexible. And you know, Elizabeth's a great negotiator. So you know, in the offer process, if there is a house with some minor damage or some minor, you know, pest work or something, like we can negotiate that and get that worked out. But I've had agents tell me, oh, there's a tiniest bit of peeling paint on the eaves of this house or on one door frame. Oh, this won't go VA. And it's like, I want us to stop asking that question, or stop saying this won't go VA, and start saying, how can we get this to go VA?
How can we fix it?
Yeah, sometimes it's a $200 repair and it takes an hour. It's like, that should not stop our veterans from...
That's what I've done that. Yeah. Like I've literally out there painting at 8:00. The neighbors are like, what are you doing? And I'm over here painting because it's paint shipping, you know? So I used to be a lender, so I kind of have an idea of things, you know, obviously everything's changed, but I'm out there painting so that we won't have to.
But the majority of any type of, even if you want to call them issues, are so small and overcomable that like that shouldn't stop our veterans from getting in houses. Now you can't go to like a fixer upper, or, you know, a tear down or something that needs some drastic health and safety remodeling, but you can't do that on conventional or FHA either. So, you know, it's not just VA loans that get a bad rap. It's just that people aren't setting expectations correctly with the buyer and seller as to what might need to be fixed, might not. But usually it's a small deal.
And the other thing is everybody has a misconception of a fixer-upper.
Yeah.
You know, I can tell you, what do you think is a fixer-upper? And me and you know that a fixer-upper is something that needs a lot of
health and safety issues. Stuff, right?
Yeah, exactly. When you tell that to a buyer, they think it's just like outdated stuff, you know? So it's important to educate our clients and ourselves as realtors to be able to express that to our clients, like saying, hey, this loan is going to be able to work for this house, or this loan is not going to be able to work for this house.
Right. So as a buyer, I mean, look for something that has great bones and does need cosmetic updating. I mean, there's, you know, you may want something turnkey and that you don't have to do work for, but obviously you can find yourself or save yourself a lot of money on the purchase price and on by, you know, rehab, cosmetic rehab, by doing the work yourself after closing. What you want to avoid, and I would say in most cases, depending on what you're looking for, is the health and safety items, those big type of like, you know, structural.
Like the toilet missing, or, you know, all that stuff.
Yeah.
But other than that, anything cosmetic, you can just paint, or you can, you know, add or take or whatever.
Have at it. Then you can make it yours.
Exactly.
Make it your house.
And Lauren, is there anything that you would like to tell our clients? Any motivation or any advice?
Yeah.
You know?
Well, thank you so much for having me on your podcast today.
Of course, my pleasure.
I would remind our buyers that time in the market is always better than timing the market, right? So buy a house and stay in it for a while, and then you can always upgrade and move from there. So if you want to climb the ladder to homeownership, you need to get on the ladder. Now, sometimes it's hard to jump from the ground to the ladder rung number 10 and get your dream house, right? But get on the first step, buy something, and then have that time in the market where now you're not paying your landlord's mortgage for them anymore, which I'm sure they thank you for. You're paying your own, right? And you're getting your own equity and you're getting your own appreciation in the market. So I'm always happy to run numbers for you, whether you're a veteran or not. The numbers have to make sense. The payment has to make sense for you, right? But if it does, that's when we'd encourage you to get into a house and take advantage of that appreciation. I'm licensed in 4 states. My team licensed in, I think, 48 states. So if you're moving in or out of California, always happy to help you. And, I love this area. Central Coast is a great place to be. So Elizabeth.
Yeah, and that's actually a good point, really quick, that she mentioned that, because even if she can't physically help you, she can refer you to one of her team members. So, especially in our VA, our veterans, they're being transferred from one state to another. Just know that the ability is there. And Lauryn, where can they find you?
So yourlendergirl.com. That's my website, probably the easiest place to find me. I'm on, I think, all the socials at Your Lender Girl. Or at Lender Girl Lauryn. See, I don't even know my own Instagram handle. So yourlendergirl.com.
Just look up Your Lender Girl.
It's the easiest way to do it. Yep. Yourlendergirl.com or Lender Girl Lauryn with a Y on socials. So happy to connect with you and answer any questions that you have.
And yes, so take that first step. And then also, Lauryn, really quick, I know the answer, but is a consultation free or is there a cost to it?
$1 million. No, it's always free. So if I get paid, it's at closing of the loan and it's not paid out of your pocket. It's paid through the bank. So I'm always happy to help you. And if it's something where it's like, I might buy next year or in a year or two, please call me, because I would much rather give you homework to do right now to get yourself ready than have you call me because your landlord just said you have a month to move and you're not ready to buy a house. And now everybody is scrambling, including you. So give yourself the time to prepare and get yourself in a great situation to buy and get the best rates and the lowest closing costs, lowest, fees, sometimes higher credits or lower credit scores. There's some, you pay for it through your rate. So let's get you in a good position to buy, and I'm happy to answer any questions in the meantime.
Yeah, that's what I say. Be prepared, because when the opportunity comes here, then you'll be ready to go. But if you're not prepared and that opportunity comes, then you'll totally miss out on it.
By the time you're prepared, the house will probably not be on the market
exactly.
anymore. So I'm fast, but sometimes those houses go into contract faster than I can even get to my desk.
Right. So be prepared. Call Lauryn. Look her up on social media. We'll tag her too. Let me know if you guys have any other questions, any concerns. If you guys want me to bring her back and see what else she... can
I can talk for
us.
hours, so be careful what you ask for.
We don't mind at all. Well, thank you, everyone, and have a blessed day.
Thank you.